Welcome back to Pipeline Trading. This episode is a perfect segue from the recent smart money videos I've shared. Today I shorted SMCI and caught an exciting 7.4% intraday move. The setup came together with multiple confluences, including pre-market research showing the institutional forces that move the market. I'll share my thought process before entering the trade, show my entry and exit, and reveal the profit straight from my brokerage account. Without the ability to correctly identify high-quality order blocks and fair value gaps, trading can become extremely risky and lead to significant losses. Let me show you how today played out. First, I've been tracking the options chain, where there's heavy open interest stacked at the $42 and $44.50 strikes expiring this Friday. Typically, institutions have an incentive to drive price below these levels so the contracts expire worthless. That gave me my initial bias to look short. At the open, price pushed higher and formed a clear fair value gap. Above that, there's an order block just above $44.50. And on higher time frames, additional order blocks extend all the way up to $48.50. Combined with the lower VIX, signaling growing market greed, and the heavy open interest positioning, my expectation was that price would push toward these levels, but ultimately close below by expiration. To take the trade, I used SMCZ, the 2x short SMCI ETF. After watching and waiting for my level, I entered around $4.50 per share, corresponding to about $45 on SMCI. As you can see, patience is required, and you must trust whatever strategy and system you are using. I later closed the position at $4.90 towards power hour, which for anyone who doesn't know is 3 p.m. In hindsight, the exit could have been managed better, but the trade thesis played out and the process was solid. Here's the trade live on screen with the fill orders from my brokerage account. Looking ahead to tomorrow, I'll be watching closely to see which direction price decides. If SMCI pushes back to the high side, I'll look to re-enter the short. But if we open lower and price drives toward $42, I'll switch my bias and look to buy calls expiring a few months out. This would position me for a bigger bounce, while still respecting the key levels defined by open interest. This is a great example of combining smart money concepts like order blocks and fair value gaps with options flow and volatility. To time an entry and plan the next move, let me know in the comments your thoughts and what you would have done differently. Thanks for watching. This has been Pipeline Trading. Stay disciplined, trade with intention, and God bless.